Hello and welcome back. Hope you're good, doing well. So this is going to be the weekly market outlook for this week. So if you are looking for membership, looking for training, just simply head to the wave-trader.com and check the membership levels. If you are looking for further information, then just fill that form and send that form to me for further information. Okay, now let's get back to the weekly market outlook. So we are having rate decision. So very important rate decision is going to be over there. Fed is going to decide where the interest rate is going to be. So highly likely they're going to raise the interest rate with another, 75 basis point. So Fed may raise the interest rate from 1.75 to 2.50. So means that another 75 basis point hike is possible on Wednesday of 27th of July. All right. So the most important thing going to be the Thursday advanced GDP figures. All right. So if we are going to see negative numbers, negative advanced GDP numbers, then technically, US going to be in recession. So if we are going to see negative numbers here on Thursday, 28th of July, let's say if the actual GDP numbers are going to drop below zero and going to be negative, all right, then like last quarter. So if that's going to happen, then US is going to be technically going to be in the recession. All right, so officially going to be in the recession. So that's going to be important. So if we are going to see negative numbers here and the Fed still going to raise the interest rate after that, after in September or in coming months meetings, all right, then Fed going to raise the interest rate in recessionary environment. All right, so yeah, that's very important point which you need to understand that. All right. And the possible rate hikes we may see from Fed after 27th July meeting going to be 2 or 3. So 2 with 25 basis point. So max we may see another 50 basis point hike. And that's what I'm expecting. So if I'm going to look at the 210 yield curve, so this is the 210 yield curve. All right, so 10-year yield stopped pushing more higher. So 10-year yield is just finding its top. All right, so 10-year yield is finding its top, means that the longer term bonds are not falling. People are putting money into the longer term bond. They are buying the longer term bond, okay, which is pressing the 10-year, 20-year, and 30-year yields lower, okay, but they are still selling these short-term bonds, all right, because they see that the Fed is still going to raise the interest rates, all right. And, if 10-year yield is not going to push above 3%, which I'm expecting right now, so 10-year yield is not going to push more higher, above 3%. And there is chance that 2-year yield still can push more higher above 3. Yeah, can push up to 350, or in worst case scenario can go up to 4%. Yeah, it is going to depend on the Fed, how Fed is going to do with the upcoming interest rate hikes. Okay, so we are already having negative 19 basis point. All right, so 2-year yield is higher than the 10-year yield. So in past we have seen negative 46 or 47 basis points. So 2-year yield went above the 10-year yield back in 1989 with 46 basis or 47 basis point. All right, and again it went in 2000, similar kind of negative numbers. All right, so 46 or 47. Then again, we haven't seen that kind of inversion back in 2008. All right, so 8 or 9, so 7. Yeah, so we haven't seen that kind of deep inversion. So if the deeper the inversion is going to be, the worse the recessions, or the worse the recession we may face. All right, okay. So what I believe that the 3%, the 10% is hitting the 3%, okay, but there is still chance that the Fed can, you know, push rates more higher to bring the inflation down. All right, so in that case, in that scenario, after the 75 basis point hike, we may see 2 more rate hikes with 25 basis points, okay, which can still push the you know 10-year yields lower against the, or this yield curve can still push lower. The worst case scenario going to be the 1990 lows. All right, okay, so if I'm gonna look at the US, you know, 2-year, so US 2-year can, in worst case scenario, can push up to 4%. Right, so 4%. So it can push up to, in worst case scenario, Fed keeps raising the interest rate. If inflation, all right, so how Fed can keep raising the interest rate? If inflation, the headline numbers are not going to get down, then Fed still can push rates higher even in the recessionary environment. All right. So the 10-year is just trying to find its top over there. Okay, so struggling to go above the 350. Yeah, so it can stay at 3 for a while. Okay, so yeah, 2 can push more higher. So the higher the 2-year goes, and the stabilize the 10-year is going to be, means that the inversion going to get more deeper and more worse recession we may face, like 1990, 2000, or 2008. Okay, so this is what you should keep in your mind before you are looking to trade. All right, so what that means, what this is telling us, this yield curve inversion is telling us, this is telling us that the central banks, they are raising the interest rate. They are trying to bring down the inflation, which is close to average, you know, around the world 9%. All right, so 9, 8.5, 7 to 9% average inflation we are having around the world in the developed economies. All right, so that's telling us that these central banks, they are committed to bring down the inflation, and they are raising the interest rate in the inflationary environment. All right, so if headline numbers are not going to drop, then central banks still can keep raising the interest rate to bring down the headline numbers. Okay, so right now headline numbers are very important. All right, so we are going to see definitely drop on the headline numbers in next couple of months. The reason, commodities prices are falling. We can see there, you know, food, wheat's falling, oil falling, all right, copper falling, corn falling, many other commodities are significantly falling. So we're going to have that impact in coming months. So headline numbers going to drop. So that's telling us that, you know, after a couple of hikes, after 2-3 hikes, Fed may stop. So Fed may stop, you know, at the end of this December. Okay, and they are already, you know, loosening the financial conditions. Okay, because of that, we have seen some strength on the risk on assets. All right, and if we are going to see that the Fed is going to pause in December, then highly likely this, you know, hiking cycle is going to be over after, you know, 2-3 hikes. So after this 70, I'm assuming that Fed gonna raise the interest rate on Wednesday, 27th of July with 75 basis points. So after that, we may see 2 more hikes with 25 basis point each. So right now, market is expecting more because of the inflation is so much high. Yeah, but we need to look at the slowdown as well. So slowdown, you know, economy is slowing down significantly. All right. So which is not reflecting yet in the form of inflation. Okay, inflation headline numbers are still, you know, pushing higher. Okay, so now let's move on to the dollar. All right, so looking at that yield curve, okay, so we can get the idea that where the dollar index is heading right now. All right, so if I'm gonna look at the dollar index, so dollar index has already significantly priced in for all those hikes. Okay, so as I said, we may see a couple of more hikes, and then Fed may pause on, and then they can, you know, roll over their hiking next year. All right, so it means that dollar is still strong and can stay strong till Fed, you know, reverse their policy. So what we may see this week, we may see another leg higher on, you know, after the Fed rate decision. Okay, we may see another leg higher, and another push up can happen over there. So you shouldn't be buying over there dollar, you know, as long as you know, we are not having Fed rate decision. So because dollar is not pricing in right now for the 75, it's already priced in, all right? So dollar is already priced in for 75 basis point hike. So what you are simply looking, a breakout, okay? If you see that the breakout is going to come during the Fed rate decision, then you are looking it to continue to keep pushing more higher, all right? And if we don't get that breakout, then and then a deeper pullback, all right? Like my structure or my pattern is showing, all right? Ascending wedge we are having over there. So dollar is, you know, about to go for a bigger correction, all right? After Fed rate decision, if it is not going to break out, all right? I'm assuming that, you know, another breakout can happen over there because of Fed is going to raise interest rate with another 75 basis point, and that can give some strength to the dollar. All right, if that's not happening, all right, then then look for a, you know, deeper pullback like daily, okay, which I have shown you in the previous weekly market outlook, all right, so which can push all the way up to 101. Okay, so just reverse the euro dollar chart. Okay, euro dollar going to be the opposite. Okay, this is what I was showing last week. Look for euro dollar to rise from 1 last week. Okay, so we have seen a significant strength over there on euro against the dollar after hitting the 1. Okay, so after hitting the 1, we have seen a significant strength over there. So similar like the DXY. So we may see another leg lower on the euro. Okay, I'm not anticipating right now. I'm anticipating it to break out. Okay, so simply finish the previous weekly market outlook move, all right, the move which I was showing last week. Just break out that flat formation which is just forming over there, break out and continue to keep pushing more higher all the way back to that previous top within these areas, okay, which is comes to 108. So even after the Fed rate decision, you are looking still it to go back up. Yes, if another leg is just appearing over there during the Fed rate decision, sorry, okay, so going up to 1 or breaking below 1, okay, they're going to be a buy opportunity all the way back to that top, okay. So Fed may slow down after this 27 July hike, all right. So it's going to depend on the GDP numbers, okay. So GDP numbers going to be important, more important than the Fed rate decision this week. So they're going to tell us that either the US economy is in recession, technical recession, or not. If these numbers are going to be positive here, all right, then USA is not going to be in the recession technically, okay, which means that Fed still can be hawkish towards their interest rate hiking policy. All right, so those numbers are going to be important. So same goes with the pound, okay, so similar. As I have shown you, similar structure, similar, you know, trade, which I have asked you to look for last week. All right. So another leg higher all the way back to that top. So you are looking that move to continue to keep pushing more higher. So if we are going to see another leg lower on Wednesday because of the Fed rate hike, then again go back up. All right. So visit those areas. So I'm anticipating a big rise on the dollar after the Fed rate decision because that's priced in already. All right, so same goes with the Australian dollar, very much similar structure we are going to see. So my drawing is just loading over there. So let's just wait for that drawing to come, all right? So there, so similar structure, similar formation, similar pattern, okay? This last week we were expecting this to break out and continue to keep pushing more higher. Risk on wave we were expecting. We are within that risk on wave, all right? So again, same, keep pushing more higher, that, you know, flat formation to just keep pushing more higher or give us another leg lower, yeah, because of the Fed rate decision. Test these lows and again stop pushing more higher back to that previous, you know, 70 to 70 250 area. So I'm not anticipating a big rise, big drop on the dollar, right? But a daily pullback from lows, which is already on its way, okay, since last week. That's deeper pullback, similar like that is already on its way. So just continuation of that. Same goes with the New Zealand dollar. All right, so this wedge which is on its way, so you are looking similar structure, similar pattern formation, this, you know, flat formation to just keep pushing more higher, all right, or give us another leg lower because of the fat rate decision, all right, and then go back up. So dollar CAD, okay, so we may see dollar CAD and very much similar structure. So I'm gonna, you know, invert that. Very much similar structure like that. Okay, so we may see, you know, we are having sideways market already. Okay, so like that. So we may see that move because of the fat rate decision. All right, so strength on the dollar as shown on the other pairs. So breakout, simple breakout as shown on the DXY. Okay, so one more leg can appear over there on the dollar CAD. All right, so dollar chief, last week we were expecting it to keep pushing more higher. It went for a 4-hour correction. The same, you are waiting for the fat rate decision and breakout. Okay, if it breaks out during the fat rate decision, then continue to keep pushing more higher all the way back to that 1 or above 1. All right, so these are the dollar pairs. So I'm gonna look at the others now, right? So let's look at the one by one. And so very much similar structure like dollar pairs on the dollar CAD. All right, so you're looking for this to break out and continue to keep pushing more higher, or another leg lower and then continue to keep pushing more higher. So this structure gonna stay there for a while, for a couple of weeks, all right, because the strength on the dollar, or the hikes which we are having from central banks slowing down, all right, so slowing down. So they have already raised, so we are having, you know, interest rate hike from the ECB as well with 50 basis point, right? So market wasn't expecting that the ECB going to raise the interest rate with 50 basis point. Market was expecting that they're going to raise the interest rate with 25 basis point, but they raise with 50. All right, and we may have another 50 basis point or 25 basis points. So ECB is not going far away. All right, you see, ECB is not going far away with its, you know, hiking cycle. So they may stop. All right, so similar structure like the Kiwi CAD, this correction which is just there to just keep pushing more higher, or another leg lower and then continue to keep pushing more higher. All right, so if I'm gonna look at the Luna C, all right, so we are still looking this to tag these previous lows, all right, previous lows, and continue to keep pushing more higher. So crypto market is trying to find its floor. So we are close to a bottom on the crypto market. All right, so Luna hasn't found its bottom yet, okay, but it's struggling, all right, so it's slowing, the drop is slowing down, all right, so the drop is slowing down. So once we're gonna have strength across the market on crypto, we're gonna see, you know, bullish move can appear over there on the Luna. So right now, what I believe that 2 or 180 is still expensive, all right, so this is expensive. You know, it still can drag more lower. It can go up to 1, or even in worst case scenario, it can go below 1. All right, so it's not ready to buy for longer term yet. All right, so wheat. So wheat is dropping simply. Wheat is telling us that where the inflation is heading in coming months. Okay, there you can see that we are having a significant drop on the wheat. Huge drop. From 13 to all the way up to 7. So it's a huge drop. Okay, so on lower time frame, the trend is clear that where the wheat is heading. So we need to just keep falling. Last week we are having some, you know, agreement between the Russia and the United Nations and Ukraine for wheat export from Ukraine. All right, so which caused the wheat to drop after that decision, all right, that deal. So we have seen some, so it has dropped already a lot, all right. So you're not going to see more aggressive sell-off, the aggressive sell-off which we have seen. So it's just simply slowing down, all right. So, and if you are still chasing these CFDs, then make sure you understand that where you are selling, all right. So the lower it goes means potential for more downside is dropping, all right. So this expanding triangle to form and just hold the moving averages and keep dragging lower. So oil, you know, last week we were expecting oil to break, all right, break that flag, right, or keep pushing these, you know, tiny flags back to that top and then drop. All right, and then breakout. So from this top 105, we were talking about that 105. So we got that breakout last week, corrections, couple of more corrections, and prices just heading towards 90. So 90 is very important figure right now on the oil. Okay, so we're gonna see breakout on oil at the 90, which is more likely. I see that the oil gonna break down that 90 and gonna head for 80 because other commodities are falling right now. So oil cannot stay stronger for longer term as long as other commodities are falling, all right. So there's going to be pressure on the oil to keep falling too. So you are simply looking for oil to clear that hurdle, all right, clear that hurdle like other commodities have already done that. They have already broken that previous low and just go back to the average price, all right, so which is 60, 55, those areas. Okay, but there is chance that we still may see another leg low, a leg higher. Okay, fundamentally there is no reason for that leg to appear over there, this another leg, all right. But as you guys know that if OPEC countries are still, you know, not going to supply enough oil to the world oil market, then we still may see another leg higher, all right. Fundamentally, chance for that another leg higher is very low, right? Because interest rate hikes are coming, demand is just falling, and economy is just slowing down. So it's not making sense for oil to stay stronger and keep pushing more higher. That's the reason oil is struggling for more upside, for pushing more upside and keep falling very, very aggressively, all right? Because, you know, fundamental, rate hikes are pushing pressure on the demand. So we may see, you know, there is chance, okay, there is chance for another leg higher, which I'm not anticipating that to happen right now. I'm just simply anticipating that the price gonna break down that previous 90 area and gonna fall up to 80 and then in longer term up to 60. So what we may see, we are just simply expecting it to just keep falling, all these corrections, and just simply, you know, break down that 90 area. So if that doesn't happen, all right, then another leg higher, okay, and again visit the 105, 106 area, and then again keep dropping. So I'm not anticipating it to go back and test the previous weekly top again. Okay, so UK oil is also similar like the WTI, but slightly different, right, from the WTI, okay, because there is still, a room for this to drop all the way up to 95. Okay, so it can drop up to 95. This move still to come. Spread is just widening between the UK oil and US oil, so we still may see another leg lower. So this trade is still to appear over there. Okay, if we see that the US oil or WTI break $90 mark, okay, or go below than that, then obviously this trade is there. Okay, then you're gonna see this move. Okay, so you are simply watching price to hold the moving averages and just keep dragging lower, right? So those four are moving averages to hold, stay below that, and keep falling. So we are having, wider spread between these two right now. Okay, so this spread too. So let me bring the spread chart. the spread between these two to get smaller. There is the spread chart, okay? So this spread to get smaller. So right now the spread which we are having is, you know, -6, okay? So we may see, you know, that move. All right, so either WTI needs to rise or Brent has to fall, okay? But based on the fundamentals and structure and patterns, they are telling us that the Brent needs to fall for another leg lower. All right, this is telling us that we may get that leg, okay, which we already have seen on US soil. So that leg which we have already seen, so we may see that leg lower on Brent all the way back to that previous low. Okay, so index is also similar, commodity index. So commodity index is also falling, but falling slowly. It has to go all the way back to these areas, 300. All right, so the average price. So again, one more up leg on oil. If that comes, then we may see another leg higher, okay, which I'm not anticipating. That's not making sense fundamentally. All right, but in case if, you know, again, something happened unexpectedly, like Ukraine war, so that can push more higher. So no reason for that to happen yet, okay? Just keep dragging lower. This move on the index means that commodities to fall. Which commodities which are struggling or forming that correction, okay, they're gonna continue to keep dragging more lower, like wheat or copper. Okay, so this is going to be the copper chart. Copper to continue to keep dragging lower too. All right, so that's the expanding triangle. Hold those moving averages. Break down right now and continue to keep dragging more lower, or get up within the moving averages and then keep falling. All right, so Ethereum. As said, you know, some, you know, coins are showing some strength, like Ethereum is showing strength. Okay, they are setting up for bottom, looking to reverse for the longer term. So last week I told you that that reversal is not there yet, as we need to see, you know, Fed or other central banks to stop hiking the interest rate and go back to the ultra loose monetary policy, which can give strength to the crypto market. So right now, you know, it's setting up for another push up. Okay, this one more push up is possible. All right, this one more push up is possible. So I'm not anticipating that to happen. Okay, I'm anticipating this to just keep breaking down, test this previous low or slightly go below that. Okay, and again give us a buy opportunity back to 2000 or at 2200. All right, so structure is clearly telling you you're gonna see similar structure almost on all coins, most of the coins. All right, not all, most of the coins. Okay, so slowing down. So the drop on the crypto is slowing down, and it's telling us that you know, hiking cycle may be close to end. All right, so same. I'm anticipating this to just keep dragging lower back to this low or new low up to 14,000, and then again give us a buy opportunity from there to 30K or short term up to 25K. All right, or breakout and continue. Okay, chances for that move is slightly less right now. All right, so you are looking these areas. Okay, these two areas right now for range movements. Okay, market is in range. The same goes with the BNB. Okay, same structure, the BNB. Okay, so slowing down, breakout can push up like others. Okay, I'm not anticipating. I'm anticipating to just keep dropping slowly back to that low or new low and give us a buy opportunity over there for short to medium and longer term. All right, so NEM also, the structure is similar. Okay, like wedge formation, watching these areas for long. All right, these short-term trades, and if it breaks down from new low, still going to be a buy opportunity. Okay, which can give you, you know, at least 100% return on that trade. Okay, so same goes with the OITA. That's the previous low, and then go back up. Okay, this can happen, but I'm not anticipating. I'm anticipating this to test that previous low or slightly break down that previous low and go back up. All right, so that's your OITA, ADA, also similar. All right, similar structure, test the previous low and buy. All right, so XLM, test the previous low, this previous low, all right, or form new low. Okay, and go back up for short to medium term buy. EOS, you same like others, it can break out, all right, and can tag that 1.50. Okay, but this is not a good buy at the current price. We need another leg lower, like Bitcoin and Ethereum to go and tag the previous low or new low and then buying over there. All right, so same goes with the Phantom, same structure, same formation. All right, nothing new. You can see over there what's happening. So when one goes down, the others will follow up. All right, same on this coin, SIA coin. All right, so now let's look. There are other coins as well, like Doge, same structure, right? So very much same structure like Bitcoin. So that's what you are watching. Okay, so Autumn is also same. All right, so now let's look at the inflation. All right, so I'm anticipating inflation to just keep falling, inflation expectations to just keep falling. All right, the 230 going to be the important place to watch for the inflation expectations to break. Okay, and 2 is the target. All right, and Euro Chief going to be a buy opportunity. All right, so without any doubt, this is what you are looking. Go all the way up to 104 or 110, 110. All right, 109, 110. All right, so this is what you are looking. So this is the previous low. 97 is the previous historical low against the Chief when we had crash. All right, so if it tests that, you are looking this to go and test that and go back up after hitting that 97. So Cad Chief to draw for a big time. All right, and looking for this flat formation. Okay, so price to, if it visit there, then keep dragging lower all the way back to that previous low. Okay, not a best shot right now. All right, it's in a sideways market, not a best shot right now. Okay, so dollar yen. So once Fed gonna raise the interest rate on 27th of July, and then as I said, that max week may have another 2 hikes, you know, with 25 basis point each. All right. And after that, you are looking for a big drop on dollar against the yen. Okay, so you're looking yen to gain after that because there's going to be a huge cyclical move on the yen. So there's going to be a huge cyclical move on the yen. The reason why we are not having that move yet, because we are having policy divergence right now between the Bank of Japan. I'm just repeating my words again. Then the other central banks. Okay, once Bank of Japan gonna stop its yield curve control, all right, and gonna let the market to move by its own, then we're gonna see, the divergence which we are having right now over there between the central banks, that gonna shrink. Okay, and it's gonna shrink over time. There are gonna be big moves. There are going to be big moves on the yen pairs. Okay, so there is still a chance that another leg higher can appear over there because of the interest rate hike, but chances are very much, less over there. Okay, so you are simply looking this to draw for a big time after the Fed rate decision. All right, after the Fed rate decision, this correction which is just forming over there, this correction to break out. All right, so the hiking cycle is about to end very soon. Okay, so this 1 hour time frame correction to slightly get more bigger and then aggressive breakout, and these one are similar like this previous one. Okay, so sharp breakout and continue to keep dragging more lower. So similar structure going to be over there on other yen pairs. All right, so last week we were expecting this to hold the top and then drop, so it held the top and then drop. So you are looking this to start falling from that previous top now. All right, so the the Bank of Japan may change its policy, in September. So there is a very good chance that the Bank of Japan can end its yield curve control policy in September. So the lower the oil prices goes, all right, so Bank of Japan may change its policy. So oil prices or energy prices are very important for the central banks to make their decisions. All right, so this 1 hour time frame correction to break out. So if it doesn't break, okay, and slowly keep pushing more higher, test that or form new high, so still again going to be a longer term reversal you're looking. So same goes with the Aussie Yen. Aussie Yen held the previous top last week and went lower, looking for a longer term drop on it. All right, and on 1 hour time frame, this 1 hour time frame correction to break out sharply, okay, form another one and keep dragging lower all the way back to this previous low. First of all, 91, or in best case scenario 87.50. All right, so looking that to break out. So if it doesn't break, all right, and keeps pushing more higher, slowly the okay, test that top or form new high, and then again you are looking a big drop over there. Okay, so Euro Yen might have found its longer term top over there, okay, as ECB raised its first interest rate after 11 years, okay, and we may see, another hike and then done. Okay, so Euro Yen is trying to find its floor. So bigger structure is very much similar like other yen pairs. Okay, so you are looking for that 1 hour time frame to hold, 1 hour time frame correction to hold. All right, and it hasn't finished yet. Okay, it still can push more higher, a couple of more 1 hour bars, okay, and then break out and continue to keep dragging more lower. So if it tests the top, then you are looking this to test that top. I don't think so that it's going to go that much far away, or this top, okay, then you are looking this to just keep dropping for longer term. Chief Yen also very much similar like that. All right, so all these corrections which are just forming over there, these corrections to break out and continue to keep dragging more lower. All right, so Cad Yen also similar. You're looking for Cad Yen to drop for a big time. All right, so if I'm gonna look at the 1 hour time frame, then the correction which is just appearing over there, so you are looking that correction to break out and continue to keep dragging more lower. All right, breakdown and sharp breakdown and looking to drop. Same goes with the pound yen. All right, so pound yen is also trying to find its top over there, and on a lower time frame, you are looking pound yen to break out that correction and then continue to keep dragging lower all the way up to 150, 149, or longer term direction going to be much lower. So if it doesn't break, this is a sharp pullback, right, after Friday drop. So sharp pullback. So that sharp pullback to fall aggressively and continue to keep dragging on. So if it doesn't, right, and prices keep pushing more higher, so still going to be a reversal trade from the top. All right, so we have already seen that chart, and let's look at the Euro Oz. Last week we were expecting this to break out after the ECB rate decision, so we have seen some strength, but that turned down. Okay, but still we are looking this to reverse for a big time. Okay, continue to keep rising for more upside. So yes, if Europe goes into recession, then it is very less likely than the rest of the world not going to go into recession. Okay, so the rest of the world also going to go into recession. So other countries may lag, like Australia or the New Zealand, they may lag, but eventually they're going to follow up the US and the Europe. So if we are going to see recession in the US on 27th, I mean technical recession, numbers are going to be negative, GDP numbers are going to be negative, then they're going to be a big talk that central banks are going to raise the interest rate in a recessionary environment. Okay, then market may take a quick turn. So all these charts gonna rise very aggressively for upside. So looking for this aggressive move for upside. All right. So Euro New Zealand dollar also going to be the similar. All right. So looking for another leg higher of that expanding triangle. All right. And pound Australian dollar also to hold that it held that previous floor, and looking for this to rise. For chart is clearly telling what you are looking, okay, from that previous floor to hold and then rise. So same goes with the pound New Zealand dollar. All right, so pound New Zealand dollar to hold that previous low and rise for next aggressive bullish wave. Some countries are struggling, like Europe is struggling, UK is struggling. Because of that, their currencies are going down, okay, and many other, you know, emerging economic countries are struggling. All right, so the countries which are doing well right now because of energy dependencies, they also gonna follow up those which are struggling right now. Okay, so you are looking for that wedge to break up for longer term for upside. All right, that wedge and price to just rise for longer term. So pound to rise against the CAD. So CAD is having edge, higher oil prices edge. As long as oil keep falling, that edge is not going to be over there. All right, and that's what you are looking. Pound to get strong. So Aussie Chief to fall all the way up to that green zone. All right, we may see another push, another leg higher over there. All right, so it can push for another leg higher, but then again eventually continue to keep dragging more lower. So same goes with the Kiwi Chief as well. All right, so yields seems to me that the longer term yields found their top, and this is going to be the time to invest in the bonds. All right, so time to buy bonds. All right, and the max, you know, hike or the max rise in this cycle going to be the 4. All right, 4 is still far away. Okay, the max rise 4. Okay, as I have explained, that can happen only then if Fed keeps raising the interest rate to bring down the inflation, even in the recessionary environment. So 27 July advanced GDP numbers are going to be the key, very important. If those numbers are going to be positive, then there's not going to be a recession in the US. Okay, so let's look at that again once more time. All right, so couple of quarters were negative back in 2009, and we had that recession. Okay, so 2 quarters were negative in March 2020. We had recession. Okay, so 1 quarter is already went negative. Okay, if we're gonna have another, you know, negative quarter on 28 July, all right, then there's gonna be a technical recession in the US. All right, so an official recession. So that has happened back in 2002. Okay, so 2 quarter, you know, almost negative or slow down. All right, so there we can see the 2nd quarter was close to 0, not negative. So I don't think so. I do have, you know, data more than that on it. Okay, but as I said, if we are going to see another negative number over there, okay, the GDP, advanced GDP data is going to be below that, below 0. All right, then that means Fed is going to raise the interest rates in coming months in the recessionary environment. Yeah, they are trying to bring down the inflation, the headline numbers. Okay, so which means that the commodities, they not gonna rise, they're gonna fall. Okay, and 2-year, you know, short-term yields can push more higher. Okay, but longer-term yields, they are finding their top. Okay, and people are already, big players, they are already, you know, eyeing on those longer term yields. Okay, because they are yummy for them right now. So these higher yields are really good for them. So bond holders are already, I mean, bond investors, they are already putting their money in the longer term bonds. Okay, so that's the reason you are having that drop. So we may see another push on this yield. All right, another push up can happen over there like that. It means that another drop can happen over there on 10-year bond. 10-year treasury. Okay, but again, longer term continuation to the downside, yields to just keep falling. All right, so now let's look at some equities chart, indices. All right, so just keep dropping for another leg lower. Nikkei index to just keep falling. Okay, back to this low or new or previous low. Keep dropping. So S&P 500 to fall for another leg lower. Okay, do not keep rising. Okay, but there is chance that after the Fed rate decision, we may see continuation. Okay, like that, this move back to that top, as I have shown you that move on some, you know, dollar pairs and on some crypto charts. Okay, we may see that. Okay, so that can happen. So what I'm anticipating this to drop. Okay, another leg low, test that, or new low, new recent low, and then again short term to medium term and then longer term buying. All right. So same goes with the Nasdaq 100 index. Okay, same structure, nothing new, same structure like S&P 500. All right, DX we have already seen, dollar chief, EuroCAD. The EuroCAD is going to be a longer term buy opportunity. All right, so go all the way up to 160 in longer run. So on last week, we have seen some strength before the ECB rate decision and even after the ECB rate decision. Okay, but that didn't survive for longer term reversal. So still looking for a longer term reversal to happen. Chart is clearly showing you are watching all these previous lows for short term buying and possible longer term reversal as well on EuroCAD. All right, so that's the EuroCAD. Pound chief already bounced off slightly. Okay, so short term, the way structure is showing, yeah, just keep pushing more higher. And if it keeps pushing more higher, then go slightly more higher back within the moving averages. Okay, daily moving averages, which daily moving averages are just far away right now. But right now, short term, one more push up, which is just happening right now. All right, short term, one more push up, and the way structure is showing right now. Okay, so Euro pound to drag and test the previous low, and then again, there's going to be a buy from there. All right, so this 4-hour time frame to keep dragging more lower, test the previous low, and then buy. All right, so Kiwi chief, similar like the Uzi chief, as I said. One more leg can happen over there. Okay, and then this flag to break down. Uzi New Zealand dollar is going to be a longer term reversal chart. Okay, so this to drop from that top and continue to keep dragging lower all the way back to 1. So short term trade for this week going to be this leg lower. Okay, and possible quick sell off on the Australian dollar. All right, so dollar peso is not in trending market right now. It's staying in the sideways. All right, but this is going to be a longer term continuation trade. All right, so if it tests this previous low, then you are looking this wave to appear over there. Okay, the wave which has already appeared over there on the dollar end, if you remember that, this chart. Okay, so it's already going higher for that next leg after having that massive correction. So sharp move may appear over there on dollar peso. So you're watching 1950, 1960 again for longer term buys. Dollar Chinese yuan to just keep rising. All right, just keep rising. So this triangle, which is just forming over there, that triangle to hold, continue to keep rising over there. All right, so that's the dollar Chinese yuan and some other indices. All right, so European indices, so very much similar like the US indices. Okay, so you're looking for, we may see, you know, bottom. As I said, if Fed keeps raising the interest rate, you know, in the recessionary environment, then indices gonna struggle. We're not gonna have, you know, strength on the indices. But if Fed is going to stop after a couple of more hikes, as I said, then indices are about to find their floor. Yeah, we are going to see bottom on indices. So same goes with the same as I have shown on the S&P 500. Okay, same goes with the US 30. Okay, US30 is also trying to find its floor over there for next leg higher. All right, that's the US30. The German 30 also very much similar like that. Okay, they are trying to find their floor. So depend on the central banks, are they going to raise the interest rate in the inflationary environment or not? All right, so first we need to see GDP numbers. All right, so gold, gold may break down that 1650 area and can drag more lower. So there is a very good chance that the gold can break down that 1650 and can drag more lower. Okay, so real yield is pointing that gold may break down. So let me, I have already shared that real gold and real yield chart on my Twitter, so go and find that. So during the Fed rate decision, we still may see another leg lower all the way up to 1650. Okay, so yeah, as I said last week, that you may look for short-term buying from 1650. Price didn't hit the 1650, it tagged the 1680 and then again bounced back for short-term. So again, if it comes to 1650, all right, and bounce back aggressively the way it has done over there, okay, then there's going to be a short-term buying opportunity from 1650. As long as it is holding the 1650, all right, and bouncing up sharply from 1650, 1660 areas, okay, or just simply look at this previous low, then there's going to be a short-term buys all the time. All right, so silver to just keep dragging more lower. So there might be a daily correction very much similar like that at some point. Okay, but I don't see that the silver is a good chart right now to trade. Okay, but yes, once you see that the silver gets back into the average price range, all right, so this is the range, so cost range, all right, our production range, silver production cost range, so 14 or 1350, then again there are going to be a longer term buy opportunities for short to medium and longer term. Potential opportunity is going to be over there. All right, so I think enough for today, guys. All commodities are falling, they can keep dropping. All right, so like corn is dropping, corn can keep dropping for more downside, it has to go up to March 2020 lows. Okay, cotton is also dropping, cotton needs to drop more, soybean is also dropping, all these commodities needs to drop. All right, so thank you very much, we'll see you back again in another weekly market outlook. Until then, bye.